Why did Vice do that hit piece against Manga? Well, they're desperate, and their desperation didn't pay off. And this is why I generally didn't talk about that story, because they did it for attention. I didn't want to give them attention. And, well, they're struggling just a little bit. Vice Media sets to miss revenue projection by over $100 million. And it gets better. Amid stalled sale talks. So not only are they bleeding money, but because they're bleeding so much money, no one wants to buy them. Rightly so. All you're going to get is debt. So the new media company has been in new media. They were new media like a decade ago. Now they're legacy media. The legacy media company has been in sales talks with Greek broadcaster Antenna Group and has sought a valuation of around 1.5 billion. That's around 1.6 billion too high, I believe. Now, Vice Media is expecting to miss a current year revenue goal by more than $100 million, according to people familiar with the situation. A blow for the new media the legacy media company as it pursues a sale. Well, it blows all right. That's why no one wants to buy it. Keep that in mind. The company presented a revenue target of over 700 million at an offsite with senior employees earlier this year. One of the people said, the expected shortfall would leave Vice with around 600 million in revenue for the year, roughly flat compared with current year -1, people said. I bet their expenses are probably $1 billion or more, though. The anticipated revenue miss comes as the company has been in talks for months to sell itself to a Greek broadcaster Antenna Group. The two companies are partners on Vice's push into international news. Oh, yeah. Yeah, so you could spread those American values globally, huh? That's the last thing we need. So Vice has sought a valuation of around $1.5 billion. Again, 1.6 billion too high. According to people familiar with the sale process, the expected current year revenue miss could make it harder for the company to fetch that price. Yeah, no, Vice should have to pay someone to buy them because all they're going to get out of the deal is debt anyway. So Vice Media is expected to see significant growth in earnings before interest, taxes, and depreciation and amortization, as well as cash flow from current year -1 to current year, according to a company spokesman. Well, how are you going to get that significant growth? Now, all of your business models are failing. Like, unless you're going to start selling yourself off in pieces, which I think that's another option. It's been a challenging year for our industry, but Vice is growing year to year in the strong financial discipline and focus. The spokesman, they all say that. This is part of some investor call. They always tell the investors things are great. Please don't pull your money out. We promise things are going awesome. Our ongoing performance is creating new opportunities for Vice and current year +1, and working with our advisors, we keep exploring the ways to position the company for growth and success. Well, you already torpedoed all hopes of that happening when you decided to go slander Manga, among other things. So Vice Media, whose assets include Vice News, Motherboard, Female Focused Refinery 29, and Vice TV, all garbage. Among a handful of media startups that raised money at high valuations several years ago, at a time when eyeballs and ad dollars were shifting towards digital media. The company is valued at $5.7 billion 5 years ago. Now, is Vice the company that lost Disney like almost $500 million? Because I think it was Vice. Yeah, and actually, when it comes to digital advertising, I think the tracking of digital ads and how actually useful and successful they are has gotten better over the years. And I think one of the reasons ad rates are plummeting is because these advertisers are finally seeing just how little of an effect their digital advertising has. Like, they realize they've been getting vastly overcharged for that shit for like a decade or more. That's a big problem. Sustaining fast growth proved difficult amid competition from online ad giants such as Google and Facebook and other new media outlets with similar business models. Just admit it, YouTube and Twitch ate your lunch. In recent months, all publishers have been contending with tough macroeconomic conditions that have spurred some advertisers to pull back spending. Well, you got what you voted for, basically, yeah. So Vice's bills are piling up. The company raised $250 million in debt in current year -3 from a group of investors, including Fortress Investment Group. That debt has come due, according to people familiar with the situation. That debt has come due. That's why they needed that Manga hit piece. Oh, shit, we need some quick views. We owe $250 million tomorrow. What are we gonna do? I don't know. Go visit a loan shark, I guess. So Fortress is currently working with Vice on a framework to restructure its debt, according to a person familiar with the matter. Translation: they can't pay it, so they need a payment plan. Also, Vice is several months behind on payments to a number of its vendors, according to other people familiar with the matter. Just wait till they stop paying their employees, because that's what's next. So, given the financial pressures, Vice's principal investor, private equity firm TPG, may need to decide soon whether to continue to fund the media company to deal if the deal with Antenna doesn't materialize. Now, this is a legitimate problem. Like, I worked at a small company that had this issue. Like, the company fell apart when their two major investors stopped funding them. This is legit. The one option being discussed is to continue to cut costs and then attempt to sell Vice in parts, according to some people familiar with the situation. You might have to. Yeah, and definitely start firing all their useless mouth breathers that commit crimes while trying to slander a whole country and industry. Yeah, Megaran had a good point about that. Like, at a time when anime and manga is booming globally, instead of joining them, you launch a hit piece on them in their own country. Yeah, that's going to make sure you're successful, yeah. Vice Media is led by Chief Executive Nancy Dubuc, a former A&E Networks executive, took over after co-founder Shane Smith stepped down to Vice's CEO in current year -4, saying he wanted to focus more on content and deals. Now, translation, he saw 4 years ago that Vice is doomed, and he didn't want to be there holding the shit sack when it fell. So he's smart. He got out. Vice has struggled to consistently turn a profit, and its revenue has been relatively flat in recent years. I'm surprised it hasn't been falling. So over the past few weeks, Vice has laid off staffers, including employees at its Munchies and Noisy brands, as well as, or as part of wider cost cuts of up to 15%. No, I could start listing some people you could cut. They're probably going to save the biggest bloat for last, though. Last year, the company tried to go public through a merger with a SPAC, but that effort ended with when investor interest in those blank check companies faded. Well, remember what happened to BuzzFeed. Now, BuzzFeed still went through with theirs. But what was funny about BuzzFeed going public through a SPAC was I think they were expecting, 600 million or something? And they ended up getting 60 million. It was pretty ridiculous because once the investors found out that it was BuzzFeed they were going to be investing in, almost all of them pulled out. And then they made a big deal about how they launched at $10 a share. They temporarily went up to 14 a share. Now they're down to less than $1 a share. And I think BuzzFeed's flop is what led to Vice not being able to even do this, because the investors saw what a dumpster fire BuzzFeed was, and Vice is pretty similar. Like, no, we're not going to be associated with this. We actually want to make money, thank you very much. We're not in the activist investing business. So see ya, and Vice, you will not be missed.